Good morning, everyone, and you're all very welcome to our midweek review here at the Alpha Capital Group. So today we have the all-important Bank of Canada, which we'll be going through shortly, and tomorrow we have the ECB. But before we look at the fundamentals, I'm just taking a quick look at, I suppose, the broader markets over the last 48 hours or so and the volatility that we've seen. So I suppose primary to that, the big takeaway factor is this continued rampage and continued strength in the US dollar across the board. In the FX G7 counterparts, we're seeing the dollar reign supreme. The Aussie, the Kiwi dollar continue to move lower. Dollar CAD is continuing to move higher ahead of the Bank of Canada later today. And of course, cable, that initial impulse that we saw Monday after the Liz Truss announcement has very, very quickly eroded, and cable is progressing through that 115 handle. So broadly speaking, markets are still very much risk aversion, avoiding those I suppose riskier asset class plays. The likes of your stock markets is still continuing to grind lower, which we'll look at it in a moment. And of course, our cryptos are also grinding lower as well. So still seeing that fairly clear sentiment, and even I suppose in gold as well. This movement that we talked about in gold retesting this bottom has played out very, very nicely from our call on Monday, and we are seeing a little bit of an impulse. Personally speaking, I am running a very low risk long position here in gold, but of course, very quickly that can be eroded as well. So risk management, having a trading plan is ultimately very, very important here. And of course, I suppose, as I said, even trade management, watching those positions as they develop and kind of minimizing and mitigating the risk to your trading account is ultimately very, very important, and what we kind of encourage here at the Alpha Capital Group. So looking at the indices very, very quickly, I can take anyone. I'm not going to focus on them all today because we did do quite a comprehensive review on Monday. But broadly speaking, those lows across the board in US has all very, very quickly broken. You can see them here. S&Ps, Nasdaq, and the Dow Jones have all taken out the lows, structurally speaking. So higher time frames, we're still continuing to churn lower. Nasdaq is still continuing to churn lower, albeit with every kind of dip and retracement. And of course, we're seeing a similar move in the S&Ps as well. So markets at the minute still very much tilted to the downside. We have to be kind of conscious of that. And of course, factoring the reality of the current financial climate, I think, is ultimately important as well. Meanwhile, in Europe, we're also seeing that kind of consolidation mitigation play on the risk side as well, as the FTSE has kind of come back into this low here around 7,200, which I was kind of looking for myself. Now, I'm not long on the FTSE. I'm not even looking at the FTSE at all myself, given the risk-off nature within these markets. Myself personally, I look at the fundamentals. I do trade fundamentals. I do trade the price action and the visibility on the charts as well. But from my perspective, it's important to migrate the two, in my opinion. So that's why I've stayed clear of this one. And of course, the DAX continuing to trend lower. We've been making kind of successive lows this week. Last day or so, a bit consolidated. But broadly speaking, bearish trend is still very much intact in both the DAX and Euro stocks. So meanwhile, now when we look at the Bank of Canada today, before we look at the Bank of Canada, let's just look at the ECB, because we did have European data this morning. Now, GDP figures in Europe this morning came out much better than I had actually anticipated. I was actually kind of leaning towards the more bearish side. We came out Q on Q 2 basis points or 0.2% higher than expected, while the GDP year on year came up again 2 basis points higher than expected. So broadly speaking, the growth narrative in Europe is still very much holding on. We have talked about this negative growth for the last two successive quarters in the US, and I suppose the ramifications that's having. The housing markets obviously down 60% from those 2020 highs, and I suppose again the recessionary indicators that comes with that, and of course the PMIs and ISMs, which are moving lower every quarter. But broadly speaking, Europe is doing quite well. Now, my opinion is that having a higher than expected GDP figure gives a little bit more of an impetus to be aggressive or kind of a little bit more wriggle room for the ECB on tomorrow for their meeting. Now, the most recent CPI figures, which we have two reports here, and we will be circulating all of this information into our Discord afterwards, is suggesting that the broader consensus is that the ECB is going to raise 75 BPS or 0.75% tomorrow. Now, the ideal scenario is here that we get 50 basis points or we get 75. I don't think at this moment in time there's many main institutions or Wall Street investment banks looking for anything greater than 75 basis points. So definitely speaking, if we do get 1% hike, then of course that's the massive upside surprise, and we will be seeing quite a bit of a shift into euro dollar strength and euro strength, broadly speaking, off the back of that. Now, given the last week or so, we have seen some significant moves in some of these euro pairs. You only have to look at the likes of Euro Odd or Euro Kiwi, for example, to see the clear visualizations in some of these charts. And I'm just actually picking up the Euro Odd here just as an example. And that shows very, very clearly how these markets have progressed since the news started to develop about this 75 BPS move. Now, since then, we've gone from an area of 143 up to 147. So over the last week or so, euro pairs are trading up somewhere between kind of 300 to 400 points against its G7 counterparts, excluding the likes of the dollar and obviously the pound, which is kind of moving quite choppily at the minute. So I suppose broader nature then is that we are looking for 75. Now, if it's a case that we do only get 50 and the ECB sticks to their kind of original mandate and goes 50 in September, 50 in October, 50 in December, that was the growing consensus and the ideal model into I suppose into just about 2 weeks ago. But things are becoming a little bit more aggressive. So forward guidance, I think, is going to be ultimately very, very important by Lagarde tomorrow for the ECB. And again, watching the after action report, I do think with many investment banks and institutions factoring in 75 BPS, that is probably the kind of the norm of what we kind of like to want to see tomorrow. I do think 50 BPS will probably be a neutral move, which is showing that maybe the ECB isn't as aggressive as maybe the markets are expecting or anticipating, and thus the euro mightn't see the reaction that we would be looking for. Now, broadly speaking, if you're looking at the euro dollar, you were seeing very, very I suppose constraint moves to the downside off the back of this volatility. And again, if I just bring in the euro dollar as well, we're continuing to see that move kind of slide lower, gradual lows being formed, albeit fundamentals could change very, very quickly on Thursday. But we are just about holding on to this 99 handle as we speak this morning. So that kind of sets up the board nicely for ECB tomorrow, looking at, I suppose, the consensus, looking at, I suppose, and putting all this information together, and then I suppose gearing up for the market reaction as well. So these two articles, very, very useful pieces of information. As I said, we will be circulating them into our Discord afterwards. And at least that way then people will be able to kind of make their own conclusions, make their own ideas off the back of the ECB tomorrow. And of course, risk management being ever so important as ever. Now, again, structurally speaking, with the current interest rates, given that we've RBA on Tuesday and it raised rates by 50 basis points, it's important just to assess, I suppose, the current flow within these markets. And that then brings us to the Bank of Canada. So the Bank of Canada, which again, more recently, last time out raised rates by 1%. So they went from 1.5 to 2.5. Now the markets are looking for another 75 BPS. Now, Macklem, who is the Bank of Canada governor, has been significantly more hawkish in comparison to any of its counterparts in the other central banks, in comparison to the ECB, in comparison to the Bank of England, and even the likes of the RBA and BOC, which obviously, as we know, it has a very, very divergent monetary policy. So I suppose the idea now is looking at to see where, and I suppose what's the forward guidance coming into, I suppose, the end of 2022. The ideal scenario, of course, we're looking for 75. So if I don't expect 50 myself, so the norm would be 75 with a potential upside of another 100 basis points. I do think that they're probably going to steady the ship and go 75 and act quicker and I suppose more rapid than, as I said, those other counterparts in the other central banks. Now, the hawkish scenario, as we know, it is another 100 basis point increase, which would give another kind of bat of strength for the Canadian dollar as well. So we just also have to factor that into consideration. I think the neutral scenario, kind of similar to what's been posed here, is obviously 75, because that's the expectation. That is kind of what the markets are pricing in. Anything above is an upside surprise or a hawkish surprise. Anything below is a negative or dovish surprise. So we just have to kind of be conscious of that as well. So that really kind of turns the attention to the Macklem comments. So some of his comments lately has been that inflation, the Bank of Canada have openly admitted that they got it wrong. They weren't as I suppose as transient with their inflation figures. Excuse me. as maybe they should have been, and that's why they're acting as aggressively as they are at the minute. So I suppose just kind of factoring that into consideration, because the dollar CAD will be an interesting asset today, but more broadly speaking, any of the Canadian dollar pairs will be of interest this afternoon off the back of the Bank of Canada interest rate meeting. So Rogers will be looking for guidance, particularly tomorrow. I think Rogers is on the waivers. Yes, Rogers is speaking tomorrow afternoon. So again, we'll be looking for a little bit more input on that one. And of course, we do have, as I said, the Bank of Canada today. So overall, the next 48 hours is going to be quite volatile in the markets. We do have, as I said, Bank of Canada today. We've Bark and Mester speaking later on today as well after the open. We've the Beige Book this evening. We've got Leal Brainerd speaking or commenting for the first time, I think, in a number of weeks. So it'll be interesting to see what she has to say, particularly off the back of some of our kind of compatriots in the Jackson Hole speaking the week before last, the Friday before last. And then again, our attention turns to tomorrow. So tomorrow we've got multiple central bank speakers aside from the ECB. So we've got the ECB conference, then we have the ECB press conference leading us into the New York Open. We then have Fed Chair Powell speaking almost simultaneously. And then, of course, we do have Lagarde speaking after the Open as well, the US session Open. So tomorrow is going to have a lot of volatility, both sides of the Open, particularly from the US session perspective, and of course today. So the next 48 to 72 hours, I'm expecting volatility. I'm expecting some significant moves, whether it's up or down. Let's just wait and see. But of course, markets, as I said, very much tilted to risk aversion at the minute. We look at that dollar strength coming through across the board. We're looking for those indices, or we're looking at those indices, should I say, continue grinding lower. And then, of course, identifying some of these moves in the foreign exchange markets as well. Broadly speaking, that's pretty much where we are for the moment. So we will be back on Friday to do that kind of a weekly recap after all the volatility that's ensued between now and tomorrow. So best recommendation is to trade safe as always. Keep your risk minimized, of course, when you're trading bigger account sizes. For any of our funded traders, you don't have to be risking massive sums of money, of course, because the returns are there, particularly if you're getting your 1 to 3s, 1 to 4s, 1 to 5s risk rewards as well. So that's pretty much it for the moment, everyone. I hope you have a great week and trade safe with the volatility. And of course, we'll see you all on Friday as well. Have a good week.